Hello everyone, and thank you for joining us on this Saturday morning, and welcome to this educational presentation of a simple to follow process for consistent stock trading. Today I want to talk to you about this simple process and show you what it entails, because it actually makes up one of our brand new strategies, and this strategy has been really generating some really nice trades, which I'll show you in just a few minutes. But before we begin, let me start off by sharing with you the process that most traders go through. And this is why I feel most traders fail ultimately, because they're really generating their setups or their signals based on things that really show no consistency. For example, let's look at this chart here in POD. Someone looking at this would say, well, it's in an uptrend, Steve, and you're always saying to buy along in sync with the trend. So I really like this. I'm going to wait for this to come back a little bit, though. It's a little bit too high for me, and I want to sell it on a nice move up. I think the earnings are going to come out and they're going to be good, and so once that happens, it should probably be sold. So I'll just wait for it to dip a little bit before I buy at lower prices. Okay, so you wait, and then this happens. The earnings come out and they're really good, and you say to yourself, well, okay, I missed the trade, right? This is what happens to a lot of traders. They'll say, I missed it. I always am a day late and a dollar short, so I guess I'll have to go back to the drawing board and look for another setup in another stock or another market. But did you really miss the trade? Because with the simple two-step process I'm going to share with you today, it actually is the cornerstone of one of our new strategies that would have generated a buy signal, right where you were thinking of actually exiting had you been lucky enough to enter into this trade. So with this process, where you would have been sitting on the sidelines and saying you missed it entirely, you actually would have been entering and been able to capture all of this, okay? So this is the two-step process that makes up one of our brand new strategies, and you're going to see how simple it is to implement this process on our new platform, the PTS Primo charting platform, that actually teaches you how to trade. So welcome, thanks once again for taking time out of your Saturday morning. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, we really have just one specific goal in mind at our company and at my sister site, which is Pro Trader Strategies, and that's simply educating you as a trader. That is, in my opinion, the thing that is missing from all traders really around the world, regardless of what market, regardless of what time frame, regardless of what style of trading you have, because most traders really rely on someone or something else to make their trading decisions for them. In the last scenario I just shared with you, it was based off some news event, right? Some earnings report. It could be based off what the banks are doing, what the institutions are doing. It could be based off of some guy on TV or someone in the chat room, but it's not coming from the most important source, and that is the market in front of you. So what we do is we educate our students around the world in over 115 countries and in virtually every state, all the things that have shown high levels of consistency. Now, I've been trading for 43 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist, so that's where we get the name Specialist Trading. A specialist doesn't mean you were a special trader. It meant that you actually made markets or specialized in making markets in roughly about 50 or 60 stocks. So if a floor broker who represented a trader who made a phone call wanted to buy or sell a particular equity, he had to go up to the trader who specialized in making a market in that particular stock. So I did that during the crash of '87 and the bull market that followed. So in my a tenure on the floor, I've traded straight up markets, straight down markets. I traded just about every system or strategy you can think of. So in my over 4 decades of trading, I know what works in terms of consistency and I know what doesn't. So why waste your time, energy, and hard-earned money searching for that holy grail when it really doesn't exist in the form of a method or a trading technique? It really does exist in the form of education, because education is the only thing that will sustain you. And the reason why we stress education is because once you have that knowledge, once you know what to focus on, well, then you don't have to rely on some guy in a chat room, some guy on TV, what the earnings are. You don't have to rely on some master indicator or what the institutions are doing. You can rely on things that have stood the test of time. So this is why we teach students all of these things, so that you can ultimately be in charge of your own trading destiny. So I'm going to share with you this simple process, once again, that makes up a brand new strategy. Towards the end of the presentation, I will tell you about a great offer and a great discount we have if you should decide to become a member of this course. But before we begin, once again, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this two-step process, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our required disclaimer, once again, we have a good crowd here today. If you haven't done so already, I'm inviting each and every one of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down. I post different educational information on a daily basis, anywhere from little bits of financial wisdom I've accumulated in my 4 decades of experience to signals our strategies have generated. So lots of great things are posted on a daily basis. Excuse me, if you want to get more education about what we do and about our philosophy of trading and little bits more of information, feel free to follow us on Twitter. Now, as I stated in the opening statements, we are first and foremost an educational company. That's what separates us from the other webinars you may have attended. Sure, we have strategies that generate signals. Sure, we have techniques. But basically, we are teaching you everything so that you fully understand everything like the back of your hand. We work with you. And then all of our courses, all of our methods and strategies come with upwards of 6 or 7 different entry points, 6 or 7 different exit points, 6 or 7 different stop placement points, so that you can decide for yourself where you want to enter, where you want to exit, and where you want to protect yourself with a stop. You see, that's the only way, in my opinion, how one becomes a consistent trader. So as you can see here, my goal is not to force feed you signals. If you come here today thinking that I'm going to tell you what to buy on Monday, or what the perfect market is, or what I think of the markets, you've come to the wrong place. That's not my job as a mentor. My job is simply to teach you so that you can ultimately make your own trading decisions. This is the same way I was taught, and what has sustained me now is a cornerstone to my trading for the last 4 decades, and hopefully it will be able to sustain you as well. Okay, so I'm going to share with you this process that makes up one of our brand new strategies once again, but just let me reiterate as I do before I go into my teaching here. Remember, I want to take each and every one of your questions, but if you do have a question, please wait till the end of the class to ask. It'll only be about 20 or 25 minutes long, and then we can take the rest of the time for questions. But I just don't want to stop at every slide to answer a question. We'll be here far too long. I know there's a lot of holiday shopping that's still left in today that many of you have to do, and myself included. So let's wait till the end to ask questions so we're not here for a good 2 hours. And the only question I will answer is this: are you recording the presentation, Steve? Yes, we record all of our webinars, so if you have to leave early or if you have any technical issues, don't worry. Each and every one of you will receive a link to this recording so that you can watch it at a later time. Okay? All right, with that said then, let's begin today's educational presentation. And what I'm going to be talking about today in this two-step process is strategy number 10. You've heard me speak about it in the past. It's only actually a couple of months old, this brand new strategy, but it's already racked up some really significant trades according to the students who are already course members. And I want to share that with you today. I can't give away all of the rules, but I can share some of the highlights of this process. It's an entirely new short-term strategy. Now, don't go run and say, oh, well, I'm not a short-term trader, so I guess I'll turn this off. By short-term, what we mean is the backbone or the basic format of this is based on short-term tools or indicators or significant ways of viewing the market. It doesn't mean that you have to be in and out of this trade in 2 days. I'll show you some setups here that lasted months, and you can stay in this weeks, months, or even years if you like. Remember, we have 7 different exit points, so it's up to you. It's just when we say short-term strategy, we mean that the format is based off of short-term tools. So what are the tools we usually use? Well, we usually use our buy-sell line. That's the 50-period moving average that tells us the overall trend. Now, we're not using that in this. It doesn't require that. That's what we mean. We're taking that out. And someone would say, well, what do you base the trades off? What's the trend? Well, we're going to use our short-term trend identifier, which is the PET-D. This is our short-term directional tool, which is tremendously attuned for finding these short-term setups. You'll see in just a few moments when I give you a lot of examples. Now, what is unique about strategy number 10 is that it's a combination of an indicator-based and pattern recognition strategy. Now, usually, we have a strategy that's based off of an indicator and the way it's applied to the chart. Or we have a pattern recognition strategy, which is simply based on a pattern that you're looking for. This combines both of those. That's why it's a little bit unique. And these indicator and the pattern, once again, are based on two short-term formats. Now, it is designed to trade in continuation with the short-term trend, but once again, you can stay in the trade much longer. I don't want you to think that this is a day trading method. Now, because this is such a good tool for trading with the short-term trend, you can also apply it to option trading. Because I'll show you in just a few minutes here. Another thing that is not required, many times if you come to my webinars, many of our strategies require you to buy when the bar closes in the top 10 or 25% of its range. Same thing with selling, when you can only have the basic requirements met if the sell bar, the setup bar, closes in the bottom portion of its range. Well, once again, that's not required in this short-term strategy. So you can get a buy signal with a bar that closes at the very low of a sell-off. And that means that's perfect for option traders because you have a less premium you have to pay. The cost of an option, if you're buying a call or a put, is much, much less. So it's great for option trading as well. Now in the course, we give you two different versions, an aggressive version and a conservative version. Why do we do that? Well, remember, our job is to educate you. Things that have shown high levels of consistency. It's your job to make your own decisions, but this is what we do. As your educators, we provide you with different options, different variables. So if you are an aggressive trader that doesn't care about risk, that says, listen, I don't mind risking a lot, I don't mind getting in and out quickly, well then you'd want to trade the aggressive version. If you're a conservative trader that says, listen, risk is everything to me. I don't want to, go through trades where I may lose a lot of money. Well, then we share with you a conservative way to trade this. Now, a lot of our students have said, well, Steve, I'm a long-term investor or trader. I'm just really here to learn about how to manage my IRA and to get some long-term strategies from you. Well, that's great, but oftentimes you'd like to offset them with a short-term method. That's what this is perfect for, strategy number 10. Now, one final and main thing I want to talk about is consistency. This is an extremely consistent method. You'll see that in just a few minutes here, but I just want to go over the definition of what consistency means, because most students or prospective students that talk to me say, well, Steve, when you talk about consistency, that means that your strategies make a lot of money, right? That they're almost all the trades and setups are winners, right? And no, that's really not what consistency means. Consistency is an awareness that you will have losses. That's okay. I can't tell you how many webinars I've attended or when I've spoken at Traders Expo or other expos, how I'll drop in and see what other speakers are talking about, and they'll say, this method I want to teach you today has never lost in the last 5 or 10 years, and you're going to be such a consistent trader if you trade this. And that's really silly because some of the best traders I know, they have losses all the time. But what separates them is that they are able to feel confident about their method because it's so consistent, it's able to recoup those losses. You see, you don't want to be trading something that never loses and then has one loss in 5 years where it gives back everything you just made. That's not a consistent trading method, even if you had a year of winning trades. What you want is a 2-step forward, 1-step back approach. Why? Because that's what will sustain you. That is the secret to longevity. Not a method that promises the world, and sure, it has some great trades, and then gives it all back. I can't tell you the number of traders I've known, traders that were on the floor with me on the Pacific Stock Exchange, that made relatively large amounts of money in a very short time, anywhere from hundreds of thousands to even millions. And each and every one of those traders gave it all back. Okay? So that's not consistency. I never want to teach you something that will be that inconsistent, even if it makes tons of money, because if it gives it all back, that's not something you should be trading. All right? Consistency means you are aware that the method will generate some losses here or there. That's okay. You're confident enough to keep trading it because you know right around the corner, most likely, is a setup that will recoup those losses and then even give you the potential to make more. Okay, so let's talk about this process. All right? Now remember, once again, this is the process, but I can't divulge all of the rules because this is a very, very simple strategy, extremely simple, only has about 2 or 3 rules altogether, and I can't give it away because it wouldn't be fair to the students in the last 2 months who have signed up around the world for this particular strategy. But I can share with you the process. That's what we're going to be talking about today. The first thing we want to do with all of our methods is to define the trend. But remember, since this is a short-term based strategy, we want to define the short-term trend. We're not going to wait to see what the overall trend is that may last 6 months. We don't care about that. We're looking for something more short-term. So how do we define the short-term trend? We apply the PET D. The PET D is a tool I was introduced to some 4 decades ago on the floor by my mentors, and it was something we had to calculate on a tick-by-tick basis, which is very difficult to calculate because there's no way to watch the markets. So what we did at Pro Trader Strategies and Specialist Trading is we got developers and we had programmers to make it a color bar algorithm. Let me show you how it works here. As we look at this educational chart in Aetna, this is the way most traders will define the trend. They'll say, well, Steve, I like to look for higher highs and higher lows to let me know that I'm making an uptrend. And then lower lows and lower highs to let me know that I'm defining a downtrend. Okay, well, that's very simple, very generic. But oftentimes, you'll come in way too late once you define. For example here, once we see that we've had a higher high and a lower high, well, right around this time, we figure we're in an uptrend. So this is where we may want to start looking for buy setups. Let's say on this little pullback here, our strategy generates a buy signal right here, and we're feeling really good because we have a really good one-day profit. We think we're going to take off, and then this happens, right? Look familiar to anybody? All right, what if there were a tool that didn't pick the top of a market or a bottom? It wasn't designed to do that, but at least could give you an early warning that a trend was underway so that you didn't get caught buying at the top and selling once it hit the rock bottom. Well, there is. It's the PET D. Now, on our platform, we have our strategy tabs. Here's the PET D tab. You would simply click that on, and the colors automatically change. So we've taken all the hard work out of it for you, so you don't have to calculate this formula the way I had to some 43 years ago. All right? Now, a series of green bars means that you're in a short-term uptrend. A series of red bars means you're in a short-term downtrend. So we would have known after 3 to 5 bars here that we're in an uptrend way back here, and you wouldn't have had to wait up here to look for a buy signal. And we would have known right here that the trend was changing, and we could have gotten out or at least not bought anything before it went all the way back down. As it says here in front of you, in my over 4 decades of trading, the PET D is the best tool I found for capturing the short-term trend. Now, how are we going to apply it? Well, once we figure out what the short-term trend is, let's say we want to be a buyer. Let's say the bars are green, all right? Well, if the bars are green, then we're looking for buy setups, and we're going to identify through the second part of this process a shallow pullback. Now, a pullback means if the trend is up, we're usually looking at a standard pullback is anywhere from a 3 to 10 day sell-off. That tells us that this is ripe for getting back in the market, okay? But guess what? We're only going to look for a 1 to 3 day sell-off. That's the second part of the process. Now, someone could say, well, how do you know? How do you know it's only going to go 1 to 3 days and not go down 10 days? Well, that's the beauty of this, of the rules in the strategy. Okay, now once again, those are the things I can't divulge right now, but that's the second part of the process. And we identify sometimes after 1 day that you have a really valid buy setup. We don't have to wait for this thing to sell off 10 days. Now, let's say we apply the PET D and the majority of the bars are red. Okay, well, then we look for a pullback to the upside. That means we look for a bounce to go short. Now, the only trouble is most pullbacks last, once again, from 3 to 10 days or 3 to 10 bars, depending on what time frame. The beauty of strategy 10 is we don't have to wait for that. So if we're looking to sell, we only want to identify a shallow pullback of 1 to 3 day bounce. That's the beauty of this strategy. Now, the rules will dictate whether in that 1 to 3 days there actually is a sell setup or a buy setup. So that's the basic process. Let's look at some strategy number 10 examples in action, okay? And these are, usually some of these happened within the last month or two. At the end of the presentation, I'll share with you some examples that happened within the last week, okay? Okay, so let's look at up moves first. Since we have been having a very strong up market, a lot of students have been saying, well, Steve, you know, this market just keeps going up and up and up, and sometimes I sit there waiting for a sell-off and it doesn't happen. This is perfect for strategy number 10. All right, so let's look at this example here in AMTD. All right, this was in the mid-November, early to mid-November. Someone looking at this would say, Steve, there's nothing happening here. We're going sideways. I can't make any heads or tails out of this. And remember, once again, most students make their decisions based off earnings, some guy in a chat room, or what the institutions are doing. And if you don't get any of those ideas by looking at this chart, you'd say to yourself, there's no range here. The market is just basically flat. Well, that's not true according to the way we teach our students, because once you apply the PET D, you see here that all the bars are green. So even though it may appear as if the market is doing nothing, the PET D is telling you, this is the translator, that the market actually wants to go higher. Until you see a series of red bars, the market actually is in an uptrend, even though it may appear it's going sideways. So where everyone else would say, I'm not going to touch this, there's nothing happening, I'll probably just get whipsawed, or I don't want to do anything until I hear the news come out, our students would be saying, no, this is ripe for looking for strategy number 10, buy setups. Now you apply the second part of the process, which is looking for that short-term pullback. And you see here, well, we had a sell-off here, we had a sell-off here, and then we have one here, and these are all just on one day. According to the rules, a buy signal is generated just off this one-day sell-off. Someone could say, how could you see that? Well, that's, once again, in the rules of the strategy, which we teach you once you become a course member. And had you taken that, whether you bought the calls or purchased the stock, you had a nice 12-point gain in the next couple of weeks, okay? Once again, someone would say, well, how did you know this was going to bounce up like that and gap up? Did you, do you guys follow the earnings, or were you looking at that news event that was supposed to come out? Listen, that's not required in any of our courses. I stopped looking at the news over 4 decades ago. So if I'm still here without looking at the news, there's no requirement that you have to. But once again, if you feel you need to look at earnings and announcements and jobless claims and things of that nature, that's fine. But none of our rules are based off that. And someone could say, well, what are you basing your rules off of? The source, the chart in front of you. With a few simple techniques and looking at the trend, that's all, in my opinion, you need to know. This is how you become a consistent trader. All right, another example here. Now, once again, if you missed that, look at this. We had one-day sell-off. Another buy signal was here. You could have generated a 4 to 5 point gain in the next 3 days. All right, let's look at bold, okay? Someone looking at this would say, Steve, how can I in any way get an idea of what, just based off 4 bars here you're sharing with me? There's no way I know what this market's doing. I don't know whether we're in a downtrend, an uptrend, we're going sideways. I'm not going to touch this thing. Well, once again, this is the way most traders trade. But once you apply the PET D, you see that the market's telling you it wanted to go lower, just based off this information. All right. So unless we have anywhere from 2 to 5 green bars, the market wants to go lower. Now, based off the second part of the process, looking for a little bounce here, well, we have it right here. Even though we closed down here, we have just a short little bounce. So that was a sell signal. All right. Now, let's see what happened off that trade. Well, 3 days later, if you used one of our standard generic stops, you most likely would have been stopped out. This is what we mean by consistency. You would have lost 4 points, either shorting the stock or maybe purchasing puts. It's up to you, but you basically would have lost anywhere from 4 to 5 points. Okay. Now, what happened with the PET D? We have 2 green bars now. So the PET D is telling us most likely I've changed my mind here. The markets are very fickle. The market's saying now, you know what? I changed my mind. I want to go up. So where most traders, go and sulk and say, this Steve Primo guy is just like all the rest. He sells me something that doesn't work and the rules, never apply. How come when I get in, I have a loss? Remember, we talked about consistency. Consistency is an awareness that you will have losses, but you have to stay vigilant because oftentimes the very next signal is able to recoup those losses. So as we see here, the market is telling us now that it wants to go higher, and a buy signal was generated off this one-day little sell-off. It wasn't even that much of a sell-off. Based off these short-term tools here, it's time to, stop licking your wounds and to get back in the game. Because if you want to play the victim card, you would have missed a nice chance to make back that 4 or 5 point loss and capture upwards of 30 points. This is what we mean by consistency, okay? Obviously, once again, some news or something came out here about being bought out. Did we have any idea this was coming out? Absolutely not. But the market was telling us through the trend and through the setups in the second part of the process that it wanted to go higher. How high, we don't know. But you think you would have still been in the trade after a week or so and captured 30 points? I think most traders would have. How about this example, an ALLK? Now, this was just a couple of weeks ago, beginning of December, okay? Once again, we're kind of trending a little bit higher, but now we're just going sideways. There's not enough information here. Yes, there is. You apply the PET D, and you see that each and every bar is green. Now, here's one thing I want to explain, kind of getting into the rules a little bit here, but that's okay. I'll share with you. The more green bars, the better. But guess what? It is not required that every green bar, or I should say that every bar be green if you want to buy and every bar be red if you want to sell. All you really need is the setup bar, the signal bar, to correspond with what you want to do. So in other words, we could have seen here that all these bars are red, but the bar that generates a buy signal must be colored green. That's all we need. So let's see if the signal was generated. Yes, it was right here. So for all intents and purposes, all of these bars could have been red. All we would have needed is this bar to be green. But the more green bars, the better. That's just telling you that there's more strength and more momentum in this uptrend. So you could have purchased this on the 3rd of December, a couple of weeks ago, 44 points in one day. Did we have any idea it was going to go up 44 points? Absolutely not. So then why would we generate a signal here? Because the strategy saw that the market wanted to go higher. So therefore we know that we're only going to be a buyer. And then according to the second part of the process, looking for that pullback, and all the other rules were met. So that just told us to get in. Now, not every student of ours who happened to take this trade made 44 points. Some of them got out with a couple of point gain. Myself, I know if I'm risking basically 5 or 10 points, I would have doubled my risk and maybe made 20 points and said, thank you, I'm out. Still, other students would say, well, no, I'm going to stay in much longer because I think it can go up higher. Is one a right decision and the other one wrong? Absolutely not. You have to make your own decisions. What we do is provide you with this high probability setups in different entry points, different exit points, different stop placement. But how you exit is entirely up to you because remember, that's our credo, that's our philosophy. The only way to become a consistent trader is by you making your own trading decisions, not us. We don't have a trade room for that very same purpose because trading rooms are crutches. You start to listen to what other people are doing and you think, well, they must know more than I do, so I guess I'll follow them. And ask yourself, if you go to a trade room, how well is that working for you? How well is it increasing your odds for consistency? Remember, in my 43 years of trading, the only consistent traders I know are the ones that make their own decisions. They don't follow the news. They don't go to chat rooms. They don't watch the trading gurus on TV. They just simply watch the chart in front of them. All right, here's another example, an ICPT. All right, a short-term uptrend is underway. You can tell, but it doesn't look like it has a lot of momentum into it. But we apply the PET D, and all the bars are green. Remember, the more the better. Now, someone saying this would say, well, Steve, maybe we're curling over. We have a doji here. It looks like we could be rolling over. I'm not sure if I really want to trade this, but if you apply the rules to strategy 10, we have a cluster here of buy signals. Now, this is a very bullish sign because you have more than one signal telling you that the market's going to go higher and really nothing has happened yet. So this is almost like a coil waiting to explode here. And as you can see, it eventually did, coming into December this last week, up 47 points. Potentially you could have captured that. All right. Once again, we're looking at KOD and another market where once again where it looks as if nothing is happening. We apply the PET D and, well, it may look as if we're doing nothing, but the market is saying, the translator is saying it wants to go higher. This is the beauty of the PET D, where all others are saying there's absolutely nothing happening. The translator is telling you, well, it may look like nothing's happening, but the market wants to go higher. So why would you ignore that? Look for some nice setups here. And you had a very nice buy setup here right in the middle of October. Coming into, I should say that was, was that October? I guess that was October. Coming into December, we had a very nice 52-point gain. Now, if you missed that, guess what? Another buy signal was generated right here. All right, so let's look at some downward moves because we know not everyone just wants to look for buy setups. A lot of times, some of the best and quickest moves are to the downside. So let's look at some recent downward moves here. We're looking at PINS. Obviously, we've been in a downtrend, but how would we have known up here? It looked like we made a bottom and started to go higher. Well, we apply the PET D. We see that the majority of the bars are green. If we apply the second rule, looking for the pullback, we see we had a nice sell here. A sell here that may have been stopped out, but then another one here that would have kept you in most likely. And if you stayed in with this very first one, potentially you could have captured 13 points. This was coming into November and December. Now let's say you didn't take any of these setups, not to worry, as we were always generating signals along the way down. Letter I, all right, here's another example, inconsistency. It looks as if we're going sideways to lower. We apply the PET D and we're kind of getting a smidgen of green and red and green. Where do we follow? Which ones do we follow? Remember, the rules simply state that wherever the setup bar is, it has to correspond or be in sync with whether you're buying or selling. So in other words, we can't get a buy signal with a red bar because the market is telling you it wants to go lower. So why would we buy if the market says it wants to go lower? And we can't get a sell signal with a green bar. So let's apply the signals. Well, we had a sell signal right here. It matches the PET D. If you used a very tight stop, most likely you would have been stopped out and missed this quick downward move. So let's say we were stopped out and we lost, say, 5 points or so. All right? Now, another sell signal was generated a week later. The bar is red. Had you taken that, you could have potentially made what you lost and then another 15 or 20 points to the downside. This is what we mean about consistency. Consistency is an awareness that you will have losses from time to time because it's up to you where you decide to place your stop. Someone taking this trade may have had a quick stop out on the next bar or two. Someone else who uses a more or a larger stop would have said, you know what, I'm going to place my stop way back and not been stopped out. So that's where we say everyone can have different results even based off the same setup. But even if you did take a small minor loss here, if the trend is still going in the direction, you'd be able to recoup that on the very next setup. All right, here's an example on PLCE. All right, this was just last November coming into December. All right, we're obviously going lower. We apply the PET D, and the PET D was green up until this point. Now we are changing our mind here. This is not a pullback. This is not making a low where some traders would have said, well, Steve, that chat room I go to says that this is some very major support here, Fibonacci support. This is some very major areas where the institutions are buying, as you can see by this up bar. What is the market telling you? We don't follow what outside sources do. Trust me, I followed that 40 years ago. It didn't work then, so it's not about to start working now. What is the market telling us? Well, according to the last 3 bars, the market is saying it wants to go lower. So this is actually a selling opportunity, this little bounce here. So as we can see, if we apply the rules to strategy 10, it generated a sell signal off that little one-day bounce, and we had a nice little move to the downside. Now, let's say you took that trade. You say, hey, this stuff really works, but look at this major support here. Listen, Steve, every chat room I belong to, the past courses I've taken, this is where all the institutions are buying. This is some major Elliott wave support here. I can't stay short, even though all the bars are red. I've got to cover. Well, listen, that's fine, but please do not look at this as support. In other words, in terms of buying, because if all the bars continue to be red, the market is still telling you it wants to go lower. We don't care about support and resistance. We just care about what the market wants to do. All right. And if the market bars are all red as colored by the translator, the PET D, it's telling you this is just a resting place before we go lower. And if you continue to trade with the strategy, you could have seen that more and more signals were generated here. So let's see what happened. You see how the market tells you what it wants to do. You don't have to listen to some guy on TV or wait for earnings. If this was some announcement that you were waiting for and you said, well, it's in line with what I thought, well, guess what? Strategy number 10 thought that it was going lower well in advance of that news announcement. So why wait for that? Just listen to the market and you'll have a higher level of consistency. All right, obviously and beyond here, we're well in a downtrend. Doesn't take one to notice that. And someone could say, well, once we apply the PET D, yeah. But the PET D told us well in advance that it was going lower. Look at these 3 red bars here. So we knew well in advance we were going lower. Now, was there a sell signal generated here or did we miss it? Well, we apply strategy number 10 rules and no, there was no sell signal generated here, but there was one down here. Now, this is where students have a difficult time, myself included, when I first started trading and say, how can I sell at the bottom of a downtrend? Isn't this where I want to start thinking about buying? Well, I know it's a difficult thing to overcome, but remember, what is the market telling you? It's telling you that the bars are red, and our translator is basically saying it wants to go lower. Until you get 2 or 5 green bars, the market wants to go lower. So if you had decided to take this, remember, it's up to you. You could have potentially captured 30 points to the downside, okay? Now, if you like to buy on these bounces, well, guess what? There was a sell right here you could have taken advantage of before this gap, and another one right here before the downward move. All right, now let's look at some other markets real quickly because I know that not everyone here just trades stocks. So here's an example in a 4-hour chart of the British pound. All right, this was a week or so ago. 2 buy signals were generated. The pound went up 360 pips, okay? Now, obviously, someone will say, well, Steve, that was off that Brexit news. That's what caused this to go higher, right? So you guys were making that play. No, we don't follow any of that. I mean, if you asked me to explain Brexit and what it would mean to the British pound, I couldn't tell you because I don't look at that stuff and I wouldn't even know where to begin. All I look at is what the market is telling me. And, you know, a good week before or two before that news came out, the market wanted to go up anyway. So that's all we follow. How about all these sell signals in a 10-minute chart of the E-mini futures, okay? Look at all the sell signals generated. Some better than others, obviously. Had you taken the very first few ones here and decided to stay short on a 10-minute time frame, well, in a couple of days, you could have generated upwards of 28 points. That's $1,400 per contract. And then lastly, let's look at coffee. All right, we know not everyone trades commodities, but a lot of traders, if the market turns sour, like to go in something that's more tangible, that's more real, rather than just kind of, you know, trading on concepts like companies. So they actually want to purchase gold or coffee or things of that nature. Well, this is a daily chart of coffee. This is in mid-November. Someone looking at this would say, well, sure, Steve, we've had a nice run up, but guess what? We just hit a top here. This is major selling. We have a doji top. It looks like the trend has changed. We have a bearish engulfing pattern. I'm going to sell this thinking it's coming down here, okay? Well, we apply the pet D because that really tells us what the market wants to do. And all the bars are green except for this one. Now, one red bar is not enough to tell us to go short or to get out of the market. And once we apply the rules, the second part of the process, we see we have two buy setups here that are in sync with the green-red bars. So forget about thinking that there's major resistance here. The market wants to go higher, and 38 points coming into this last week in December, okay? It represents thousands of dollars in coffee contracts. Okay, so let's recap before we go into the question and answer portion. Remember, there's a simple short-term setup process to strategy number 10. The first thing you must do is apply the PET D. That's our short-term trend identifier. It's the best thing I know of for identifying the short-term trend in my 43 years of trading. Then, once we know whether we're going up or down, whether the market wants to go higher or go lower, then we simply look for a short-term pullback, a 1 to 3 day sell-off in an uptrend or a 1 to 3 day bounce in a downtrend. That's the simple process. Now, I know a lot of you are saying, well, how do we determine how far this pullback is? Is it 1 day? Is it 3 day? Well, those are the other rules, the remaining 2 rules we teach you in the course. Now, ask yourself, 2019 is almost over. We have roughly about a week or so left. Do you think this new strategy can help your trading going into the next year? These are examples. You know, a lot of times I'll go to webinars and I'll see that they show these amazing examples, these amazing trade setups, and then I look at the date and they're about 6 months to a year old, all right? Most of the things I showed you happened within the last month coming into this last week, okay? Now, we have a great special discount for all of you today that want to become members of the Strategy Number 10 course. We're going to give you a great, roughly about a 10% discount on the price. You're going to get all the entire rules to Strategy Number 10. You're also going to get the PET D short-term trend identifier included in this as well. Aggressive, conservative version. All right, average trade can last anywhere from 1 to 10 days. If you want to get out sooner, you can. If you want to stay in longer, you can. Okay, it's great for option traders. All right, this is a great, great offer. Now, all the examples you saw were generated and by using our PTS Primo charting platform. All the examples where everything is one-click access. Okay, so we're going to throw in the PTS Primo charting platform with this included, with the strategy and all the rules, with the PET D. We're also including the PTS Primo charting platform. I designed this with Pro Trader Strategies specifically to make trading simple for you. Now, we're going to throw in 12 months absolutely free. This would normally cost close to $12,000. We're throwing this in absolutely free. Now, let me share with you what's included with this, because you're just not going to get Strategy 10 along with the PET D. There are so many other features included with this 12 months free usage of the platform, okay? You're going to get, obviously, Strategy 10. You're going to get the PET D short-term directional tool. You're also going to get another feature I designed with Pro Trader Strategies, our Strength of Trend feature. This is a great tool we designed that has an uncanny ability to determine whether there's still more momentum left in an uptrend or a downtrend. So this many times can help you determine if you want to stay in the trade or not, all right? You also get over 90 of the most prominent technical indicators, automatic exit levels. Remember, we give you upwards of 7 different exit levels. This is just one of those techniques that is automated, so you can automatically decide where you want to exit. But here's the most important thing, the signal scanner. because I know a lot of you are not able to trade, and many of you have jobs, and you come home and you want to see what to trade the next day or buy options for. Our scanner can do that for you. It can literally scan thousands of charts, markets, in roughly under 5 or 10 minutes on a nightly basis. So you'll know the best setups for the next day. Here's how simple it is. You simply hit our scan page, you load up whatever market you're interested in, from NASDAQ to Dow to DAX, European markets, Asian markets, commodity charts, futures charts, currency pairs, whatever market you're interested in. We have data for all of them. And then you hit scan and you'll see a series of green or red bars. The green bars mean that there's a buy signal in the corresponding market. The red ones mean there's a sell signal. It's that simple. And this process takes roughly 5 minutes per night. Okay. Now let me show what you could have scanned for in the last week or so. All right. Here's an example in LEA. Okay. Looks like we're kind of in a nice little uptrend here. If you apply the PET D, you see the last 4 bars are green. All right. Now we closed here. We had a one-day little sell-off. The bar is green. If you scanned for this on December 9th, which was last week, I believe, last Monday, on the night of December 9th, you would have seen that a sell signal was a buy signal, I'm sorry, on the 10th. I should say, I'm sorry, if you scanned for this on the night of the 10th, you would have seen that a buy signal was generated. Now, you could have scanned when you came home from work, or you could have scanned 5 minutes before the close, and you would have seen that that's a valid buy setup. And the stock went up 16 points in the next 4 days, okay? This just happened last week. Now, if you like to buy puts or go short the market, we look here in IFF. We see here that we're kind of going down to sideways. You apply the PET D. The PET D, the last 4 bars are red. And 2 sell signals were generated, one on the 11th and one on the 12th. You could have scanned for both of these. They would have appeared on the scan. You could have purchased puts and taking advantage of a 15-point drop in 3 days, okay? This just happened last week, all right? So I'm sorry, if you're interested in becoming a student of mine in the Strategy Number 10 course, you could have taken advantage of this if I gave this presentation last week. But don't worry, there are tons and tons of signals constantly being generated for Strategy Number 10. So be one of the first to take advantage of this entire new strategy. We only have a handful of people trading this in Europe and in the United States, around the world. And so be one of the handful trading this. Start 2020 in the right direction. Let me tell you about a great discount we have for you today and how to take advantage of this. You're going to get Strategy Number 10 along with 12 months of the PTS Primo charting platform, where everything is just one click away, and all those other features that are involved with the platform as well are yours for 12 months. Now, normally this would cost, if you include with the PET D, it would cost you close to $5,000. We're not going to charge you that. We are going to end with the platform. It would cost close to $5,000. We're going to discount it 10% and only charge you $44.95. But guess what? We will offer you a payment plan. We realize not everyone can come up with a lump sum of $44.95. So for a small deposit, just a couple of $100 maybe, you have to talk with Pro Trader Strategies, you could still be up and running. All right. Now don't quote me on that because they handle all the discounts. But I know for a small deposit, you can still be up and running. You don't have to come up with $44.95. Now, let's say you already have the PET D. Let's say you're a PET D student of mine already, because that's a separate feature. You don't have to buy the PET D twice. Your early pre-launch cost, if you already own the PET D, will be $34.95. We'll take $1,000 off that. In fact, we'll discount as well. We'll only charge you $29.95. All right? And you can also have a prepayment plan with that as well. So you can also put down a small deposit and not have to come up with $29.95. So for both of these different options for purchasing this course, you don't have to come up with that large lump sum. You could come up with a small deposit. You can still be up and running and become a student of mine, okay? Remember, you're going to get the course. You're going to get the PET D along with 12 months. This would normally cost you close to $5,000, but that's free. I'm sorry, it costs you more than that. It costs close to $7,000. Now, here's how to take advantage of this. Contact my sister site. They're Pro Trader Strategies. They're the ones that are in charge of all the tech support, as well as putting together a payment plan for you. They would be happy to discuss it. There's absolutely no obligation. In fact, I personally would recommend calling them directly at 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to discuss a payment plan with no obligation. You can sit and think about it and then watch this presentation again and then make a decision. But that's what I would personally do. The link you see at the very bottom is the link that will take you to the sign-up page, as well as more information on Strategy Number 10. And it's been posted in the chat box on the far right-hand corner. So there's a live link in the chat box of the GoToWebinar column. Now remember, I said if you have any questions, you can ask me as much as you like at the very end of the presentation. So now's the time. Just go to your question and answer box in the GoToWebinar column on the right there. And they would you just type in, and I would be happy to answer any question you have. Remember, in the chat box, there's a live link that will also take you to that information page. Someone says it says about educational information. Oh, okay. I'm sorry, I didn't go over that. They're asking about the educational correspondence. I believe that's what you're asking about. Yes, one of the things I didn't mention, with all of our courses, especially strategy number 10, you will also get access to my email address, my personal email address. You can email me whenever you like. If you have a question concerning strategy number 10, concerning how to implement the rules, or if you just want to check your work, you can email me whenever you like. I was answering emails this morning on a Saturday morning prior to this webinar, because students are always sending me emails, and that's fine. I want you to send me as many emails as possible. So yes, you can always send me emails, and I'll be there with you, educating you through email correspondence, okay? So that's also included in this as well. Someone's saying, does that last for a year only? No, that's, as long as I'm still your educator, you can email me as long as you'd like. That does not change after a year, okay? Someone is asking, what is the price of the platform after a year? Well, after a year, once again, that's up to Pro Trader Strategies. I believe the basic format for the platform runs like $97 a month. And you can still work with them on that price as well. So it's still very inexpensive. I have used platforms that have cost me roughly close to $500 a month. So this is very inexpensive. And plus, we have so much more information rather than those other platforms, okay? Richie asks, 1 to 3 days trend, do you wait for the bar to close in the top or bottom 25%? Good question, Richie. No, that is not required here. That's one of the good things about this particular strategy, because if, let's say, a signal is generated using, let's say, strategy number 4. Well, strategy number 4 requires for a buy signal to close in the top 25%. And that's great, because that's just the way the strategy is generated based off a pattern, which is totally different from this one. Now, the only trouble with that is if you want to trade options, because the market closed in the top portion of its range, the premium increased in the option for a call as well. It's the same thing with a put. If you want to go short using strategy 4, that bar needs to close in the bottom range, okay? And that will mean the put is going to cost a lot more because it's going in that direction. The beauty of strategy number 10 and why we say option traders love this is because many times you'll see a bar close towards the low, and because it's based off a short-term setup that is entirely different, you will get a buy signal. So you don't have to worry about it closing in the top 25% for a buy signal. It can close at the very low if you want. And because of that, the option premiums will be less. And so a lot of option traders love this method because not only do you get a buy signal, but you get a buy signal on the very low of the bar, and the cost is less to buy a call or buy a put if you're going the opposite direction. So no, that is not required. Neither is the 50-period moving average. Those things are not required. We're looking for short-term format here. And that's why we've had such great testimonials from the students who have already purchased this in the last 2 months who really love this, because you don't have to wait for all the rules and requirements to be met on an overall trend setup. You can wait for the short-term trend and get in. People are asking, so is this technique good for the current market? Yes, it's been great. If you've noticed, every day the market closes higher. It doesn't. If you're a pullback trader, the market has not sold off more than maybe one day, and then it goes right back up. And that's not enough many times if you're a standard pullback trader to get into a trade. You need at least 2 or 3 sell-offs, 3-day sell-offs. With this particular method, you don't need that because it's based on short-term requirements. And so there have been a number of great buy signals generated, even when the market hasn't pulled back. It's continued to go higher. Now, one thing I haven't mentioned, one of these days, it could be next month, it could be next year, it could be in the next decade. No one knows yet, but we will get a strong market to the downside. When that happens, markets go down a lot quicker than they do go up. Many times it'll take 6 months for a market to go up, and it can all be erased in 1 or 2 weeks in a strong down market, okay? That's where strategy 10 can really come in handy, because in these strong downward markets, there will not be any bounces, a chance for you to get out of a long trade or a chance for you to get in short. So that's where strategy number 10 works perfectly. It's really a great strategy because it's based off the short-term trend, and you don't need those 1 or 3 day bounces to go short or to get back in. All you need is just a few requirements met on the short-term basis. So they're great questions. Yeah, and that's where strategy 10 will work in great if and when we finally do get a bear market. Great questions. Lastly, Steve says, can I use, there's another Steve here, can I use this on other platforms? Well, what you can do is you have to talk to Pro Trader Strategies. They have the add-ons. In other words, if you want to get the up and down arrows for strategy 10, or if you want to get the pet D, let's say you have TradeStation, you can apply those on those particular platforms. But since you're getting 12 months free of the platform, the PTS Primo charting platform, I mean, that is a much better deal because everything is one click away. I mean, you don't have to, open up indicator box, search the list of indicators for, for strategy 10 or for the pet D, open up pet D. That takes you so long compared to the PTS Primo charting platform. We specifically designed it to make it easy. Everything is one-click access. From looking for a strategy 10 buy or sell arrow to looking for the pet D colors. It's right there. So it's so much simpler on our platform, and you're getting that free for a year. But they do have the capability to have it for the major platforms. They're asking what the major platforms are. Just off the top of my head, TradeStation, Metastock, MT4, Thinkorswim, NinjaTrader, just about Sierra Charts, all the major platforms you can think of, you can apply the up and down arrows and the pet D, okay? All right, good questions. We're at the end of the presentation now. I just want to say thanks for taking time out of your Saturday morning. If you really want to get your trading in gear for 2020 and start out 2020 in the right direction, I can't think of a better way to do that with this method, okay? We've had tons of testimonials from students who have already decided to take on this method, and they just love it because it fits their nature. So I would suggest watch this video once you get it, but please remember not to sit on this deal for a long time, or else it'll go back up to that close to $7,000 range, including the 1 year of the platform, okay? So as we close here and take one last look at our disclaimer, I just want to say thanks for taking time out of your Saturday morning. Thanks for joining me. I wish you all a really great holiday season. I wish you a happy and healthy and safe one. And most of all, I look forward to all of you becoming new students of mine in the new year in the Strategy Number 10 course. Thank you so much for taking time out of your Saturday. I'll see you next time. Have a great day. Bye-bye.